please make a note in the chat if you cannot hear us, and we can make the adjustments as necessary. Today's presentation is on all things budget. I wanted to start off by first hoping everyone had a great day and everyone's safe out there. So with that being said, let's get started. We got a lot to talk about. So all things budget, budgeting for nonprofits, we want to focus a little bit more on nonprofit than anything else because that's the sector that we are speaking to in the audience. Additionally, budgets are for any organization or for-profit or nonprofit, governmental agency, and anyone else. But we're focusing today on nonprofits. Next slide, please. So today we want to cover purposes for budgeting, basic elements of budget, how to project costs, and budget implementation. So with these four, we're going to go through these four and then also talk about a few other things. Budgets can be very, very detailed and very, very long-winded, as they say in the financial world, only because it takes on many different cycles in many different areas from how does that work with your audits? How does that work with your funders? How does that work with your internal organization? And then also, how does that just work in general to make sure that you are meeting your goals and your expectations from not only your mission statement, but also in your internal direction that you're going. Next slide. So what is a budget? That's the first topic. Importance of budgeting and budgeting for nonprofits. We can go down to the next one. I want to just briefly go over, there are two types of budget that we're going to talk about today, but there are many other types. One is the operational budget, and then the other one is capital budget. Now, I like to always talk about these two because there's the distinction between those. So first, but let me read this bullet. I'm not going to read through all the slides. I'm pretty sure the slides is up and people can see that. But I will also talk and give an example as we go through them as well. But I did want to read the first bullet. A well-planned budget will focus on primary goals and objectives of the organization and provide financial and programmatic adaptability. A nonprofit organization, NPO, financial plan should include budgets for operations and capital. Now, what I like to state is operational budgets, and this is not edged in stone, it's more so for layman's term. I like to, when I'm speaking to clients and anyone else, focus on general and administrative expenses within your budget and your internal infrastructure. And that helps allow you to plan and organize your expenditures out for your year or your program. So the capital budget I like to focus on is say that that's more related to your program or your different funders that's giving you money and how that relates. Now, let me break down those two, what I'm speaking of, so you can understand a little bit clearer. Inside your budget on the operations budget, that's your overall budget. So you're going to have an overall budget that covers everything that's in your organization, nuts to bolts, everything. And then when you go to the capital budget, you sort of go down into, my opinion, more of the detail for each program. So if you have a program that's working with BCYF, a program that's working with, I don't know, Funders of America, another program that's working for kids, you'll have those separate programs detailed out. And then within those programs, there'll be a budget for each one of those programs. So within those, they will detail out and talk about how much money you're bringing in and how much expenses that's going to be outlaid. Now, with capital budgets, they include budgets for ongoing effects for greater than 1 year. That is true. It could also be for under a year, but most of the time is for things that's going for over a year. But I do like to make that distinction between the capital and the operating because a lot of people use the words interchangeably. I use mine one way, another person may use theirs a different way. But when I think about capital budgets, I think about the capital that's coming in and how is it coming in? And that's coming in via my programs and my donors. When I think about operational budgets, I think about overall, how is this budget affecting my overall organization and how I can move between my income and expenses. Next slide, please. Okay, the importance of a budget. Importance of a budget. Budget allows you to effectively track your expenses. Track your progress towards your business goals. So the first thing that's most important for when you developing a budget, first you want to sit down and look at what is my mission, what is my objectives for this budget. So if it's overall, what is my objective? To make sure I'm able to pay all of my expenses, and then look at my income that's coming in to make sure that the expenses, there's enough income coming in that matches the expenses that I'm going to outlay. Then there also you want to look at, in some cases, because some funders want you to look at, hey, how does this income, the monies that we're giving you, relate to just our budget that we are able to, that we're giving. We gave you $100,000. We want to know how you're spending our money. How much are you spending our money on salaries? How much are you spending on G&A? How much are you spending on rent, direct versus indirect, uh, different things of that nature. Also within your budget, you may have things such as fundraising. What about my fundraising? We're going to touch a little bit on all of that, but with fundraising, we're going to just briefly touch on it because fundraising can be very tricky because there are a lot of things that go along with that when you're filing your tax returns, when you're receiving an audit, and different things of that nature. Budgets also allow insight on the current financial performance that you may be trying to create, that you're trying to achieve. So a budget is just exactly what it says. This is what I'm budgeting to do. My actual will be actually what I'm achieving and how is it going in comparison to my budget. So what you want to say is a key takeaway from budgeting is the financial direction of where your management wants to take the company, helping quantify the expectations of revenues that a business wants to achieve for a future period. So in the future, I want to achieve this cost. I want to have um, my business or my organization achieve this level. So I'm putting a budget together to achieve that. My organization is that I want to grow to have 5 employees, 3 contractors, and maybe 2 administrative personnel. So with that, along with that, how much revenue do I have to achieve that? Well, what now then you'll break down what revenues or inflows that I'm going to have that's coming in to help me achieve that goal. So it gives you the insight in the current financial performance, what's going on now, and how far it's going to take for me to get to that next level to make those, to achieve that goal, and then what business decisions I have to make to achieve those goals. Also allow you to project future financial performance. In some cases, you may say, I want to try and get to this point of, of having $1 million organization. But how long is it going to take for me to get there? Because currently, right now, my budget is only showing $25,000 worth of inflows. So 25,000 to $1 million is a long ways to go. But how long would it take me to get there? How long would it take me to achieve the salaries or the outflows to make sure that this particular program that I'm running is achieving its goals in the way that it should be able to achieve, and what my vision and what my mission statement and what I think that it should be doing. What is the projection for that? Budgets give you your future projections of how much money and expenses that's going to outlay, also from all different forms and all different forms of inflows and outflows. Next slide. So budgeting for nonprofits, in short, budgets are a great tool for nonprofits because one, the transparency that it does allow. It also allows for it to plan and meet short and long-term goals. Also keeps donors informed on where money is being spent. I want to focus on that last bullet that it says that it keeps the donors informed on where money is being spent. A lot of times working with organizations, they work with various donors that they'll sign up for a contract or a grant. I mean, not a contract, but for a grant. They'll receive a grant. They'll apply for different monies from a federal government, and they'll receive those monies. And there are different stipulations that come along with those monies that they receive. Some may require that they give them a monthly financial statement or annual financial statement, and it tells them how you're performing and what you're using the monies for. And some of those monies that you receive, they will say to them, I want you to spend my money on exactly what your this program is meant for school kids, or for you to build a playground, or for after school care. And you may say, well, I have monies to have to pay for also the general administrative. You have to make sure you put that inside your proposal, your grant proposal that you're submitting, that you state in there that you're going to have a projected cost that's going to be for, that needs to be met for your G&A, which is your general and administrative expenses, to make sure that you achieve those goals, because people are working behind the scenes. People are working inside the organization that needs to get paid as well. Also, there are outlays not only that's dealing with salaries that need to be met, such as rent, utilities, there may be equipment, there may be repairs that's needed. And that's important to know that donors, they want to be informed of those different things. Some things are direct relation to the budget, and that's one line item that we're going to go over later on, is direct. Some are indirectly related to the budget. And then you have just your general administrative that it covers not only that particular program, but it may cover a multitude of programs or other things that's going on within the organization. There's also, it meets your short and long-term goals. What is my short-term goal? Because that program may end in less than a year. And then some programs say that this is a 5-year grant with 2 option years. You have to also project for that as well. You have different and various types of grants that will be received and achieved. And you have to make sure you're reading your RFPs or the monies that's coming in to make sure you're adhering to those different type of guidelines that they want. Some want also with that short and long term for you to have an audit. And if that's the case, then you make sure that when you have an audit, there's a schedule inside of the audit report that says budget to actual. Going to talk about that as well. That's important to know whether you are meeting or exceeding or underachieving the particular line items that you have that's on your budget. Next slide, please. So how does a budget work and the components of a budget? Let's go down and let's go through that. Next slide. So budgets display all the projected revenues and costs for a allotted amount of time. So you want to also set up a budget, and let me get into a little bit of a more granular side. You want to say, if you're using Excel and you're not using some type of program, and let's say you have a template that's in Excel, you want to have a column that's related that says total budgets. And to the right of that, you may have something that has monthly, or you also may have it set up that it has each program that you may have and the budgets for each program. And then within those programs, you may show monthly. And the reason why you're doing that, because a budget can take you down as detailed as possible, so you'll know exactly how much money you're receiving, but it also can have it on an overall overview, which is on the total column that tells you how much the overall organization has brought in for via revenues and how much it has also outlaid in the different costs, and also for how long of a period of time, monthly, quarterly, annually. It can look at all those different variations. And I encourage everyone to look at that. The more detailed your budget is, the more detailed you can plan and project and also know how to achieve your goals going forward. Also, you have also within there the basis of how the money is to be spent. And what that means is you have different basis of, when they use the word basis, they're speaking more so of, is the money being spent over on this particular program via direct, via indirect, via G&A, and you're looking at the monies that's going in and out and how it relates together. Also, when you speak of basis, that can be interchanged with also the words of cash versus accrual. That's a deeper dive that needs to be discussed. A lot of small organizations stay with cash basis, and what that means is when they spend the money, that's when they put it on the budget. I mean, that's when they think that the money has been outlaid. When they receive the money, that's when they record the money and say, I have it, it came in the door and it went into my pocket. But most nonprofit organizations, majority of them, 85% or more, follow the accrual basis. And what that means is that when I send out an invoice, I'm recording that money. And although it has not came in yet, it is considered an accounts receivable or a grants receivable that this money is due to come in. Just like on your expense side, when you receive your bill from BG&E or your Verizon bill, you record that as an outlay and cost or an expense to say, I have spent that, and you put that on your statement and say, I have spent it. Even though you have not wrote the check, use your card, or paid for it, you say, I've spent that. Now, during the time that you say, I'm waiting to pay that bill, that's called your accounts payable. And that is what a lot of organizations want to see. And the reason why they want to see that, it gives them a truer picture of how much money you're going to receive and also what is really being out there. Because a person may not spend their money because they say, I don't have the money to spend that yet. I don't have the money. So I'm not going to spend this money just yet until I receive some other additional monies coming in. But that gives a false presentation to the donors that says that you could be sitting on $100,000 because you don't have it to spend yet. But they want to know if you are going to be expected to spend that, because that gives them the idea of how much money you're really going to need, and whether this program that you're trying to run is really going to make some money and really going to be effective and achieved. Because if you overspend, that means that you're not managing your money correctly. That means you did not create a budget effectively, and that you're not walking through and viewing your budget every month, which you should be doing. And sometimes some people review it bi-weekly to make sure they're meeting the budget to actual. A budget also makes a statement about the organization's intentions and plans. By that, what they're saying, exactly what I was saying previously. You want to look at what the budget is saying, how much I budgeted out, and how much I plan to spend. And it gives the organization that someone's looking at the organization, even yourself, what intentions and plans that you can only do because you only have so much funds, or what you plan to do because you have the monies coming in. And it also allows you to say, I have $500,000 that's coming in the door because I received this grant or I received this contribution. I have $500,000 coming in the door. And you receive that $500,000, and then the first thing you say, well, how am I going to spend it? And the first thing some people say is, well, I have to make sure that my staff and myself get paid, but also that's not achieving the goal of the program. So that's why a budget is important, because you want to sit down and say, what is it that is going to take for me to achieve that goal and achieve that plan for that program or for that mission statement of my organization, and where I'm going, what my plans are, what my intentions are, and where I'm going. That's why that budget is so important. And to break down between the programs, and to break down between all across the board between the overall infrastructure. Budget also use the budget to measure the performance. And that's what I mean by the actual budget versus actual. So one program may have budget versus actual, and it may look great. I budgeted $20,000 for program costs, and right now I'm more than halfway through the year, and my program costs are right on point, that I spent $10,000, so I expect to be right on budget. Sometimes your costs may say I budgeted $20,000 for program costs, and now I'm halfway through the year and I've only spent $4,000. So now you should be asking yourself, what's going on? Why aren't I spending that money? Why not? It could be things going on, such as in the last couple of years, what a lot of nonprofit organizations experience, which is the pandemic. We were working with a few organizations that plan to go overseas, to go and do some work overseas. But because planes were grounded and you could not go anywhere due to the pandemic, a lot of their monies were sitting on the books because they were hoping and waiting for the government to open up the airlines to allow them to travel. So therefore, they didn't want to redirect the monies to go somewhere else within the budget. They wanted to stay with the budget of going overseas, but they had to wait. So when they looked at their budget on a monthly basis, it looks as if my travel cost was budgeted for $20,000, but I spent $0 in actual. So now I'm not achieving my goal. So when that happens, you want to put notes next to it so you can explain to your board why I'm not achieving my goal, why I'm not achieving this. So within the budget meetings, you can know this is not being achieved for these various reasons. There are also times when you're going to look at budget to actual that you say, I had planned to spend only $300,000 for salaries between everyone. Man, I'm over budget. I spent $375,000. Now, what does that mean? I'm $75,000 over budget. That means that I have a budget that says I'm going to spend all my money. So if I'm overextended by $75,000 in salaries, where can I cut costs to put my budgets back in line? And then you start to look at that as well to see, because otherwise you're going to have to make up that $75,000. Where can I make up that $75,000? Is there another grant that I can see? or the fundraising contributions or something like that that I can request that can make up for that $75,000 and not wait until it hits me and says, hey, I don't have enough money to go ahead and pay out all this money. I need to make sure I achieve my goals by the end of the year to pay out this $300,000. I'm going to be overextended by $75,000, and now I'm over budget by that amount. That doesn't look good to your funders as well, because when they ask for your financial statements and it shows excess expenses over revenue, that shows $75,000 that you spent over your expenses, over your income. And then the questions come, why did you spend more than $75,000? Did you not have a budget? Did you look at your budget? Did you track your expenses and make sure that your expenses versus your outlays versus your budget are being met on a monthly basis or on a quarterly basis and on an annual basis? And then that brings in the question about your organization. So a budget is very important for those various reasons. Next slide, please. Who should be involved in the budget process? And it's not necessarily in this order, but these are the players that should be involved. You want to start off with, of course, always the executive director that's giving direction and going and giving it direction, because they're receiving their comments, their knowledge, their thoughts of that the board may have, because the board is going to sit down and say, hey, we want to make sure that the organization is following the overall mission and the objectives of where we see the organization going. The executive director is going to make sure that the day-to-day and all the activities are being completed and is going to be adhered to exactly the way to make sure we achieve our goals and our projections, or our intentions over the period of time. You also need to work with finance and accounting staff, and that needs to be strong. I tease everyone all the time and say, accountants are always it seems like between doctors and lawyers, the lowest on the totem pole, but they're always the ones that everyone goes to know, why are we spending so much money? How much am I going to owe? Are we going to have enough money to pay our staff and pay our different expenses and things of that nature? How much money is coming in? That's why the finance and or accounting staff is so important, because they have to tell you where the historical costs are coming from, and those historical costs are important. And that's when you get into more so your financial forecasting, which we're not going to talk about here. You use your for financial forecasting. The accounting staff or finance staff can tell you what is the history over the past few years, and if history repeats itself, this is how much we're going to spend with a few marginal increases between inflation and cost of living adjustment. This is how much more we're going to spend. So that accounting and finance staff is very important to be involved in the meeting with the budget process. The other person, very important, is the grant writer, because they have to write that grant to make sure specifically it achieves the goals that you're trying to reach. Also, it achieves all of your areas of concern that you may have to say, I want to go in this direction as far as the different monies being outlaid, but also the types of monies that's coming in, because some monies that come in may not fit the organization's mission, or types of monies, types of direction that the organization wants to go. The grant writer is looking at that and making sure it writes to line up between the narrative and the monies that's coming in. But the most important, they're putting in there and saying what we're going to spend this money on. We're going to spend this money based on these particular items right here. For example, for after school care, we're going to spend the monies on this particular line item. We're going to have a graduation for the kids. We're going to have the kids do a program that not only just have them walk across, we're going to pay for the cap and gowns. We're also going to pay for the little kids to have them get dressed up so that they can show this is how you're going to look graduating from kindergarten all the way up, and this is how it's going to feel, and give them inspiration for when they graduate from college and high school. So a grant writer is going to write all of that up. But then they're going to also put in there how much that program is going to cost to achieve that. What is it going to take to achieve that goal? How much money? And that's when they're going to request for that money. They're going to break that down. But a grant writer also wants to put in there how much the G&A, the general and administrative cost, is going to take for those persons, such as the grant writer, to get paid, because they're not working on just that program. They're working on several programs. That particular program manager that may have multiple programs that they're working on. What about the finance and accounting staff? They work on everybody. Same thing for the executive director. And what percentage of each of them will be allocated toward that particular program? So the grant writer, as you see, needs to know all of that. So all of four of those persons and additional staff and anyone else that's working within the organization is needed to put that budget together so that they know how much money is being made, how much money is need to be brought in so that they can expend out. And this is the initial time when you start writing the grant proposal and responding to the RFP that you start putting together a budget and you start saying, this is what's going to be outlaid. This is the based on the monies that's coming in. We're asking for this amount of money, or we're responding to an RFP, and this is what we think that this cost is going to take to achieve the goals that's stated in the RFP or within our organization. And once all of this is put together, you get a final approval and submit it, the budget at least, to the board. So the board gives the final approval. Now, initially, the board said, yes, we want to go after this particular RFP, or this is the direction that we want to go after. So yes, put the budget together for not only for this program, but then also related to the overall organization as a whole, that operations budget, so that we can approve both. And then you go back with the grant writer, as I was saying, and put together the program and make sure that it fits into the operational budget. And then you check those boxes off and say, now board, can you approve both of those, or at least the one that I'm working on particularly right then and there. Next slide, please. Now let's look at the components of a budget. So I mentioned before about budget to actual. I mentioned before about revenues that's coming in, income / revenues that's coming in. The words are used interchangeably. I'm trying to stay as layman's terms as possible because I use income and also revenue. They're particularly the same. Revenue is used mostly in nonprofits, income used mostly in for-profits. Just trying to make sure I say those words across a board so that it's still the same. Grants and contributions are areas that you want to look at that make up your income. Also earned income, such as you have sometimes fee for service, sales of goods, membership dues, fundraising. All of those are various different types of revenues, income that organization may receive. And that's important to know so they can be distinguished between each one of those. Why is that important? Well, that's important because you want to know how much money is being received as a grant, how much money is received from contributions, because these are people that's just giving monies and they may be small, that they give you $25, $100, or $1,000. But a grant may receive, you may receive $500,000, $100,000, $75,000. And that's very important. And the reason why it's important is because it also matters about your outlays and what particular reports that you have to show. Also, it's important for when you're completing your Form 990 to break those down and how much is grants, because they're going to ask you to distinguish between the two. Fee for service and sales of goods, that's important also for a nonprofit because that is considered UBI. You'll hear that term if you ever sell goods. And if that organization's mission is not to sell goods and it's to, again, let's use the after school program, but you say, I'm going to sell t-shirts. That organization was set up to receive, to perform an after school program, but you're selling t-shirts. That's really considered a UBI. And UBI stands for unrelated business income. And that's important to go on your 990, and that when you put that that amount on your 990, you say, I sold t-shirts and I made $1,000. It cost me $100 to make the t-shirts. And therefore I have a $900 profit from selling those t-shirts. You have to pay taxes on that as a nonprofit organization. A nonprofit organization can pay taxes, and it's all centered around, not all, but majority of the time centered around UBI, which is unrelated business income. And that is a direct relation to sometimes sales of goods that you may sell. And it may not be set up in the course of your mission statement or what the organization was set up for. Next slide. So the expenses, components. This is what I was speaking of earlier between the direct, indirect, fundraising costs and G&A costs. So let's start with the direct costs. Direct cost is directly related to that program or to this organization. What is it taking to achieve that goal? Um, Again, I have an after-school program. My teachers would go under personnel costs for my direct expenses. My my I don't know, different equipment that it takes to have for the playground cost that I may rent that goes under the direct cost. I may have supplies that's directly related to that, such as for pens, pencils, or things of that nature, boards so that the children can color and make paint on. Those are direct costs. Your indirect cost is just what it says, rent, utilities. You using it, and it's directly related to the organization and directly related to the budget, and it's directly related to your program, because without it, you can't operate. You need to rent the facility or rent the playground or rent the location, and you need the utilities to turn it on for the BG&E, the phone, or the cable TV. It's still related, but it's indirectly related because it's not directly related. Now, in some cases, you do have rent and utilities in direct costs, and that may be because you're renting a location solely directly related, because that particular program requires that you have that rent and utilities to run that program. So sometimes that is the case. Now, I do want to point out a couple of important things that's related to direct and indirect expenses. And I was speaking of cost. You have different things, and this is more of a deeper dive, but I do want to go there. You have various amounts that I call stages within a nonprofit organization. You have under 100,000, and then you have 100 to $300,000, and then you have 300 to 750, and then you have over 750. Now, what does that mean? I'm speaking more so of expenses and not necessarily revenue, because if you have the expenses and you're going to spend out that much, 9 times out of 10 you have the revenue. But in some cases you may not, and I'm gonna give you an example of that in a minute. The reason why I say up to $100,000, sometimes funders don't require certain requirements. They don't have certain requirements. Like they may not say, I need to look at your budget, or I need to look at how much money you're expending each month. There's no audit that's required. There's nothing required for you to show me. That's up to 100,000. When you start receiving and start expending out 100 to 300,000, that means that your grants, your contributions could start getting to the point that funders are asking for different breakdowns in what that is. So when it gets to 100 to $300,000, you may have to adhere to different different guidelines within the monies that you receive, and that is show me your budget to actual report for each month for the organization for this particular program or overall, and also how much did you spend. When you receive some state grants and state monies, they said when you exceed over $300,000, we want you to have an audit. And there's different levels of an audit that you may have to have. And we want your audit to show a schedule of expenditures, budget to actual. We want you to show direct, indirect, and G&A. How does that break down? And between those, they also may say over $750,000 expended. That's an A133 audit. And an A133 says that I expended out over $750,000. Now, that's a lot of governmental grants that you may receive, and that's only for federal government funds. So a state organization can give you more than that, but they are not going to require A133 unless they receive the monies from a federal organization. So that's a deeper dive, and we're going to stop right there. We don't want to go too deep into that. We want to stay with the budget, but the budget is going to be required for any of those when you get to a certain level, because they want to make sure your organization is completing this task that it said that it wanted to achieve. What's the future outlays that it expects to expend out, and what is the budget to actual, and how does that relate to what you're actually spending versus what you told me you were going to spend to receive this money. I budgeted that I was going to spend out $300,000, and then they go and look, and you only spend it out $75,000 because you're trying to hold on to the money. So that's why they do a budget to actual. Next slide, please. So research, estimating personnel costs, estimating indirect costs. Let's talk about that a little bit. Next. So research. When determining overall program costs, consider the following. Research estimates, that's personnel and indirect costs. Collect and document each quote. Choose estimate that is most reasonable and appropriate for your project. So let's start with the first one, and this is important. Research estimates. The reason why they say research estimates for personnel and indirect costs. A nonprofit organization is set up differently than a for-profit. A for-profit, if I walk in the door and I say I'm the director or I'm the CEO, and I see the monies that's coming in my that I'm earning every month, and I say, oh wow, I'm going to make $2 million. I want to go on payroll for $500,000, and I'm not a publicly traded company, and I don't have anyone overseeing my monies. I can go on payroll for $500,000, and I may have an organization a company that's set up only of 5 employees, myself being one of them. That's my prerogative. I'm a for-profit organization. As a nonprofit organization, you have to go out and research to say, what does an organization of your size and revenues that's being received pay an executive director, pay a program manager, pay an administrative person? So that's what they mean. That's what a person means when they say research estimates of personnel and indirect costs. How much is rent for those areas? Because you don't want to go and say, I want a nice facility downtown overlooking the harbor at $20,000 a month, and all your money is being spent on that. So you want to research and estimate there, but at the same time, you don't want to overextend yourself and say, I want to pay my executive director $500,000, and that is not the same amount that an organization of that size is paying, that is spending out. Because a funder could call you out for that, and you could also receive a negative response back from not only the funders, but also the oversight, which is the auditors, and say, if you're not expending monies that's of a like organization. Collect and document each quote. When you're collecting quotes or bids, they follow different guidelines. You have allowable and unallowable cost guide that sometimes you have to adhere to. Sometimes you also have to look at quotes that you have to follow when you're doing an audit, that you follow the different quote rules for a bid. A lot of times, if you're receiving governmental monies, bids say that when you receive governmental monies, that up to $25,000, you have to take the lowest bid, or you have to estimate and say, why didn't you take the lowest bid? When you receive over $25,000, they want you to have a minimum. When you're going to purchase something that's over $25,000, you have to receive at least a minimum of 3 bids. And then you have to say, why didn't you choose the lowest bid? Now, they changed that a little bit lately in a lot of pronouncements under the accounting guidelines, and they're changing those because a lot of people are doing things virtually, online, and over different areas. So it's a little bit easier to get different quotes from different areas. So talk to your auditors when you're going through that, or your accountant CPA, so that they can make sure they guide you on the different costs for the different types of monies that you will receive. The different pronouncements, so it takes too long to go through that, but you want to watch that. You also want to look at your quotes and estimates on how much money you're going to spend out for the various costs that's directly related to your program. That's going to be your heavy expense items, such as not indirect, such as rent that a person may think about, or personnel costs, but they may be, I have to do a lot of repairs. So therefore, what repair person or a company that I can utilize, and what are their particular costs, and what is my background on that? Because when I go to look, I want to make sure that I'm not being blindsided for a cost that took to repair something for $25,000 when I could have got it repaired for $2,500. So you want to look at those things and receive quotes, and look at the quotes, ask questions, document the quotes, and maintain and keep the quotes, so you can have something to refer back to in case your invoice or your voucher that you're about to, not voucher, but your PO that you receive that says that, hey, this is what I'm about to pay, and this is what they're quoting me. This is the same quote that I received when I initially spoke with that vendor. Choose an estimate that is most reasonable and appropriate for the project. As I was saying, you just want to make sure that it's reasonable and is estimate. You'll hear that a lot in nonprofit organizations. That is reasonable, and that cost is there, and that you're about to outlay. Next slide, please. So estimating personnel costs. I spoke on this a little bit before about staff need, the different persons that you need. So first, you want to build an organizational chart to determine what staffing needs, staffing needs that you're going to have for that organization as an overall, but for each program. And then you want to determine what areas they're going to work in. A lot of times people have big dreams. They want to have an organization that has a huge huge staff. And then when they look at all the costs, then they say, whoa, I think I chose too many people. One key areas that I want to touch on about when you're choosing staffing, don't just look at their hourly rate or their salary rate. Look at also the benefit costs, such as their payroll taxes, and also the matching of the FICA, and also the healthcare costs. If you're going to offer retirement, a lot of grantors want you to say, are you going to offer healthcare to your staff? Are you going to offer any retirement? They're looking out for staff to say later on in life, they don't want to see them receiving monies through state or on social services or anything like that for later on in life. They want you as an organization to pay for those things now so they can get the best health care, but also have monies for later on in life as well. And again, like I said, you want to look at an organization of your size, and you can research that via the internet. You can look up majority of nonprofit organizations are considered public, so you can research to see how much their staffing costs are. Sometimes you can receive you can work with different consultants, and they can research to see how much your staffing costs are, and you can do all those different things. Now, when your organization is of a size that's maybe smaller, you don't have to sometimes do as much research and make sure that you're following these guidelines, but you can't predict what's going to happen in the future. You want to always achieve the biggest organizations possible. So the way you start is the way you're going to end up ending, and the way you're going to move forward. So if you start dreaming big, then you need to follow the big guidelines. You can't dream big and have small guidelines that you're going to follow to make sure that you being penny pinching and watching everything, watching every cost. That's what the budget is for. You budget it, and then you do the budget to actual, and then you see whether you're over or under in the cost. What are the salary wage amounts for each individual? Again, you just have to look at the wage and determine that. One item to definitely touch on. They are coming out with different guidelines to say when a person is to receive overtime. So look at the Department of Labor. There was a couple of years ago, they were trying to make it permanent that administrative personnel that receive over, I think it's $46,000 they can be salaried, but under $46,000, if they're on the hourly rate, they should be receiving overtime. If I'm not mistaken, Baltimore City had a new pronouncement came on that they were paying workers $8 an hour, and they were talking about raising their salaries up to $22 an hour, going from $8 to $22 an hour, because they say the cost of living adjustments, the cost of living for that worker was just too low. So you want to make sure you're watching not only what's going on in your organization and surrounding areas, but also what the government guidelines from the Department of Labor is also stating as well. What are the salary and wage amounts for each individual, and how much should be included for fringe? I want to touch on the last one. Fringe is you have take out for Social Security and Medicare, which makes up your FICA. When you pay a person on a salary or a hourly, you have to match that FICA. You also have to pay it into pay into their unemployment through the state. So in the event they have state unemployment as well. You also have 401k that you want to make sure that you have budgeted for and that you may offer. You have health insurance that you may offer. You have HSAs, health and savings accounts that you may offer. It's all those different things that you offer to your staff so that you can maintain the staff, because you need the staff to run the organization, and they are primary and integral part of the organization just as much as it is and they are part of the program costs, direct and G&A, that make up to make sure that program and the goals of that program is achieved. Next slide. Next slide on that. Thank you. With determining indirect costs, consider the following. What is the allowed percentage of indirect costs? Now, I want to go into this a little bit. I like to back into this, and indirect costs is your rent, your utilities, telephone, and internet. And like I said, indirect costs are those different things, but you also have your G&A costs such as just supplies for the general office. That has nothing to do with that grant. We may have just other different things, paying a janitorial service. You may also have travel back and forth for a person to go and receive copies, or they're paying for the travel costs, photocopies, and different things of that nature. Well, G&A costs, like I said, you want the grant writer or the person that's developing the budget to leave amounts in there for the G&A. I follow a rule that I like to follow, that your program cost, which is your direct cost, should be about 70% of the total expenses being outlaid. And your G&A cost should be no more than, should be 30% of that cost. But actually, G&A cost, that's high. G&A, and that G&A cost that I just said includes not only general and administrative, but it also includes indirect. So 30% is the most that you want to be around there. Sometimes if you're not running as well and you have a lot, may go up to 35, but that's about it. And then your program cost may be 65 to 70. I've seen it as low as sometimes program cost 60, and the G&A and indirect is at 40%. A good marginal percentage for G&A costs is around 22%, indirect costs around 5 to 7%, and the rest is being made up in direct/program costs. So again, let me say that again. G&A costs is around 22%. That's a good number to be at. Around 5 to 7% on indirect costs, and then about the rest of it is made up in your direct and program costs. Next slide. So budget implementation. So you want to develop a draft budget after you go through all these steps, and you go back and you start off and you get the board to say, yes, we're going to bid on this particular RFP, or we're looking to receive this money, or we're going to request this much money. So the board approves, and then you start working with the internal staff to develop the budget, and you go back and get the budget approved, and you go back and do that. And then you start putting the budget together, and you say, hey, before you get approved, you say, let me put this budget together based on the expenses that we're going to outlay, and does it match our narrative? And now is there enough monies coming from the inflows to meet all the outlays of the expenses? If it's not, where can I cut costs? Where can I cut costs down that I don't expend as much, to make sure I'm able to meet expend all the monies that's being received? You also want to leave just a little bit wiggle room just to move something around, maybe 2 to 5%, because there are going to be overruns in any organization that you're working with. So you want to have a little bit of monies to be able to overrun. You also want to make sure when you're developing the budget, that you consider as much as you can on all, basically putting together my wish list. What is it going to take for me to achieve that budget? Once that is there, you want to internally, with the executive director, the accounting staff, the program manager, the grant writer, and approve that budget. Everybody's on the same page. Everybody's saying, yes, that's good. Then you want to go back to the board and say, now board, can you approve it? And the board may have questions. They come back to you, and then they come back and say, yes, let's make these changes. And then you go back and then you approve the budget overall. Now it's time to implement the budget once the monies are received. And then you implement the budget by expending all the monies out that you said in each month, and as they go along. But as you're doing that, each month you want to track your expenditures on actual. How much am I really expending? Don't just put that budget to the side and say, oh, I did that to get the money, and now I'm not going to look at it again, or I look at it at the end of the year. No, every month. At your meetings that you're going to have on a monthly basis, you want to say, what's my budget actual for January? And now we're going into February. Now we're going into March. So what's my budget actual for January and February? Great. What's my budget actual for January, February, and March? Okay, what is it right now? This is my first quarter historical cost. If I've been open for several years, how did I do the previous first quarter of the last year? What about the previous first quarter of the last 3 years? And that tells me whether I'm growing or am I staying the same? Am I headed in the direction that I want to go in? Now, based on my historical, I predict that in quarter 2, 3, and 4 that I should be able to receive this much money. Does my budget say that I'm going to receive that much money? Because I based it on the history, and I based it on history, but I'm also based it on how much this particular program said the money is going to come through, and I was going to receive. So then you continue to go through each month and each quarter, and now you have history of how much money was received, how much was expended out. Did I meet my budget to actual guidelines? And did I meet my budget to actual goals? And did I over or under expend? And was I on target? And that's what you want to do, implementing the budget and as you're going through, and you're going to present that not only to the internal staff, but also to the board as well. And so the board can ask the questions and ask questions about what you're doing. And you also present that in your audit as well to say that this is my budget to actual, and it looks to be good. Because what you don't want is the infamous words of going concern. That means you're in trouble on the audit. Next one. So develop the budget, develop the draft budget. I went into this a little bit detail in the slide there because I wanted to go and get that out. Like I said, this is an overview. Project income based on current fundraising and revenue activities. Like I said before, it bases on membership dues, grants, contribution, fundraising, and how much money's coming, how much inflows are coming in from there. Project new income based on new activities, because you have your old that's going to be recurring, because this may be a 3-year project that's ongoing, and then what's the new ones coming in. And a budget is a wish list. This is what I expect. I may overshoot the moon. I just want to make sure it's realistic. I don't want to say, I want $1 million. No, I can see that this is cold, this is lukewarm, and this is hot. Well, I want to definitely put my hot items that I think that I'm going to receive inside of my budget. I put a few lukewarm. My cold, I'm not sure if I'm going to put in there, because that's just, you may just be developing the budget and you're not going to meet those goals. And you want to make sure the budget works for you and that you have a good budget that you're going to try and meet those goals, and it's realistic to meet those goals. With the expenses, determine the cost for each program. It's so important that you break down each program and the cost that's related to the program, just as much as it's important for you to relate it to the overall organization. Determine the cost of each organization or strategic goal. Your goals for your program may be different from the goals that you have for the overall organization, but they should align, and you want to make sure that they're aligning out. If you look to the left, you see the charts that go up and down to show the pie charts, and then also to show the graphs. You want to look at that. What's my income versus my expenses? That's going to tell me that I'm over and under. You can give a visual presentation such as that right there that says pie charts and graphs, but then you also give a narrative budget overview that's written in words and telling you whether you're meeting those expectations or not. Next slide. Like I said before, get the budget approved, present it to any committees as needed internally, and then lastly, you must get it approved by the board, because you want the board to approve that budget and make sure that budget is accurate for what they wanted to achieve, because the board is not looking at the day-to-day, they're looking at the overall picture of the organization and what direction they're headed. Boards may use that budget and use the budget to actually determine this is not working. We're not going to stay and keep working with children that's under 10 years old in the after school program. We want to expand and not only work with children in before and after care and summer camp, we want to expand to an actual school, because we have enough kids coming in. So since we have enough kids coming in, we're going to start with a school that just deals with up through 3rd grade. And then we're going to go from 3rd grade and we deal with elementary, middle school, and high school. A budget can tell you all that as long as you're using it correctly. But if you don't, it's not going to tell you anything. So always remember, you want to budget because you want to plan so that you don't fail. Because if you fail, you may not have planned at all, and that's not good. So you want to make sure that you're planning with your budget and use it as an overall goal so that you can move forward. Okay. Implement the budget, assign management responsibilities. This is more so when you get the budget implemented and you've got everything going. Now let's get down to the nitty gritty. Hey, assign the management responsibilities. Who's going to oversee this budget? Who's going to oversee this program to make sure that this program is achieving its goals based on the narrative that you wrote and based on what the numbers that you put down? Is it who, so we can make sure we have some accountability within management and within the organization to make sure that all the goals are being received. Incorporate into an accounting system. You cannot write it on a sheet of paper. You cannot. You cannot just say, I'm going to write on a sheet of paper income. This is how much I received every month. you need to go ahead and have it inside an actual system. Systems are not costing that much. They have various different types of systems, from Fresh, I believe it's Fresh, not Fresh Start, but Fresh accounting system, to QuickBooks, to very expensive systems such as Neltec and different things in those systems. You want to make sure you use a good accounting system so it can not only track not only your inflows and outflows, but it also tracks your payables, your receivables. Who owes you money? How many times have you requested that you were going to ask them for the money? And then you want to put it together and put it onto a general ledger that it gives every transaction that I've spent out for that month, that quarter, that 6 months, that year, and also over the last 5 years. It also tells me what my cash flows look like. What is my balance sheet? How much do I have in the bank at the end of that month? How much do I have in payables that's out there? What about my fixed assets, capital expenditures that I had to purchase? Is it being depreciated? That's what an accounting system can do. Writing it on a sheet of paper won't allow you to do that. Keeping it in Excel won't allow you to do that. That'll take a lot of various different spreadsheets within Excel books, and also they're linked together. That's a lot of time when you could just purchase an accounting system for $300-400 or $200, and it can do all that. Or you can pay a monthly subscription and you can get all that achieved. Monitor and respond to changes as needed. Budget to actual analysis, like I keep mentioning. That's so important, so you can make sure you're meeting your goals. Next slide. That's the next slide. Any questions that you may have? I do want to point out a few things that's not necessarily in there, like I mentioned about a tax return. A tax return for a nonprofit organization, you will follow a 990. If you are for-profit that may be using a physical sponsor, you may follow a regular tax return and follow 1120, 1120S, but that you're using a physical sponsor because you're for-profit and they're going to make sure they receive the monies for you. You also have audits that's related to an A133. That's when you expend more than $750,000. Sometimes under that, you spend a little bit less than that. You may have what you call an A122 audit and different things of that nature. But all audits track things, and they're looking to see how are you maintaining your internal controls. That's the most important things. Are you keeping documentation so that you can use your documentation to track your expenses and make sure you have support in case someone has that. I saw that came in the chat in reference to the free software to use. Please use every free software there is. Wave.com is a good one as well. I agree with you 1000%, because if you can save some money in the nonprofit organization and have more monies to be spent on more programmatic costs, that's the most important thing to do, because you're achieving the goals of the program and of the organization. Like I always say, cash versus accrual, that's a deeper dive. A lot of people don't want to talk about the cash versus accrual, and we may talk about that the next time on a deeper dive. That's important as well. We also want to look at budget line item changes. If you are over and under some audits, when you receive an audit, they may also give you a finding for you being over under because you're not tracking the budget, the actual cost. So that's important as well. You have fixed versus variable on your expenses that we will talk about later on again or next time. These are my fixed costs. I know they're coming every month. My rent, my utilities, those are coming. My variable costs, this is a one-time big cost because I had to do a graduation ceremony, and that was a variable cost and those things. So just wanted to point out those different things that goes within a budget as well, because you're going to look at all those items. You're picking up not only fixed costs, you're picking up fixed and variable, and you're putting the overall budget together along with the program costs as well. That's my presentation for today, and I invite anyone to have any questions in the chat. Now I turn it over to Kiana now.
Real quick, please use the Q&A function to ask any questions from Mr. Anderson. So just to recap what we just had from Mr. Anderson, they'll be offering, this will be recorded, and it has been recorded, and it will be posted on the BCYF Fund website. Okay, so if you missed anything, if you want to ask additional questions, you can send those questions to assistance@bcyfund.org. And in addition to that, there will be about 3 additional workshops that focus just on the financial aspect of nonprofit management. And we know that this is a really, really important piece when it comes to managing and sustaining your nonprofit organization. So there are pieces in this workshop that you didn't understand, quite grasp, please send that question to assistance@bcyfund.org, and we'll send it over to Mr. Anderson's team, and maybe he can give you some one-on-one support with any type of questions around acronyms that we use or further defining some of the terms that we use. So I see a couple of questions in the Q&A. Mr. Anderson, can you see them?
I believe I can. Let me scroll up a little bit. Let me start at the top. Like I said before, wave.com is great. Thank you for putting the website inside. I believe it's Sally Cooper for putting that in there so that everyone can be able to see to go to wave.com. One question is, when you're requesting general funding, are BCWAF looking for just the capital budget? No, they're looking for the overall budget as well. They don't just want your program budget. They want also your overall organizational budget as well, because they're going to base that as well. They don't want an organization that's receiving millions of dollars to try and take away from some of the grassroots fundings that we're trying to give to smaller organizations. So it's important to submit your overall budget as well, because we are evaluating that as well. Thank you for all the support. Yes, it is available later for review. And thank you for all the positive feedback. We thank you. I believe that was the only question in the chat. Yes.
Okay, well, everybody's still thinking about their questions. I know our last slide was around evaluation. So there's a QR code. Ta-da. So all things budgets. Here's the opportunity for you to ask or maybe give comments on the conversation that we just had. Were there pieces that you felt as though, should have been explained more? Are there other questions that you might have? Or is this even relevant and important to you as a nonprofit leader? We'd love to hear your feedback and offer any suggestions for future technical assistance workshop we will be hosting. So take your phone out, scan the code. If you're having concerns or issues, please let me know. And are there additional comments in the chat?
Just positive feedback. Thank you very much.
Okay, well, there aren't any more questions. I'd like to thank the Anderson team for their feedback and their financial technical assistance. Do you have any closing remarks, Mr. Anderson?
Yes, I ask everyone to please take the time when you're putting together your budget. Just take the time to think about everything from an overall perspective, and then go down to the program. One last thing I would always like to mention, I did not mention this in the slide. You can follow 2 types of approaches that I like to talk about, which is a top-down versus a bottom-up approach. If you heard me throughout the slide, I kept mentioning about a bottom-up approach, which is look at your expenditures and what you're going to be expending out, and let that dictate to how much income revenue you're going to need. That's a bottom-up approach because you're looking at your outlays. Sometimes people like to start with a top down and say, I have $300,000 now, how am I going to expend that? And then they start from the top down. The reason why I like to start from a bottom up, because it gives me all of what I'm going to expend out, and not necessarily, and doesn't just confine me to a $300,000 to work with. So, but I hope that everyone enjoyed. I'd like to thank everyone for taking the time to listen, take time out of your busy schedules. It's very important. We're trying to do as much as we can from the whole BCY team and everyone on the TA team to help and assist anyone as much as possible. And I'd like to thank Kieta and everybody for all their assistance. Thank you very much.
Thank you very much. Everyone, you all have a nice evening. I hope you get to go outside and enjoy some sunlight. And we'll see you at our next workshop. Check out the calendar that's going to be posted on bcyfund.org. There are about 32 workshops left from now until May 14th. So we look forward to seeing you. Share it with your team, share it with, all the leaders that you know. These workshops are free and open to the public. Anyone who's interested in nonprofit management and leadership, and also who intends on applying to the BCYF Grassroots Fund grant opportunity. Thank you all and have a great evening.